What's up, everybody? Welcome back to Earn It, Save It, Invest It. In this video, I'm going to break down Hims buying a company called YourBio and how explosive it's going to make the stock price and just the company in general. I'm going to go over exactly what YourBio is, explain their product, how Hims is buying it. Are they going to be using a loan? Are they using cash? What is it going to do to the stock price? I'm going to break all that down really quick right now. So if you can, just please give a like and subscribe. I'd really appreciate it. And so let's just break down Hims and Hers buying this company called YourBio. It's a blood sampling company. It's not a blood sampling company. Let me break it down really quick. Right now, just so you know, Hims, I do have a stake in Hims, right? Right now it's about $1,500. I am in at about, it says 500. I'm up about 500 on this, but I sold a little bit of mine for a decent amount of profit. And I used to have 50 and I sold 10 pieces of Hims at 58. So I timed it properly, and it's never good. It's never good to try to time the market, but I've been watching Hims now for a while, and I knew Hims was going to go down. Now, I also think Hims is going to have a good December, depending, but I'll break that down in a minute. But Hims right now, it is, it's something I own. It's not just something I'm going to be commenting on. It's something I've owned for a while now, so I am a shareholder. So Hims and Hers acquires YourBio Health, a pioneer behind advanced pain-free blood sampling technology. Hims and Hers, leading health and wellness platform, today announced that it has entered a definitive agreement to acquire YourBio Health, a capillary whole blood sampling technology. Powered by YourBio's advanced blood sampling devices, the acquisition will help accelerate efforts to redefine and modernize the overall blood collection experience, making pain-free blood sampling the new standard. Now, this is directly from Hims and Hers, their investor relations page. So this is what they were releasing. YourBio Health develops technologies designed to simplify the process and expand when and where and how blood samples are collected. So this is a blood sampling, it's a blood sampling product. It's not a blood sampling company. It's a blood sampling product, right? It's essentially this product that you put on your arm, and it's painless, no needles, essentially, right? There is a needle involved, but you don't know it. Not like when you go to the doctor and they're like, all right, go. I had one doctor, they scrubbed, they did the sanitizing pad, right? And then they threw it and they missed the trash can. And as she was about to stick the needle, she was like, I hope I don't miss this one. I was like, okay, jokingly, she hit my, I have some good veins right there. So it's easy for the people, but people don't like that. And so this is a product that it says right here, state-of-the-art micro technology design, sample handling, and device integration. So, and it's they have proprietary technology on this. So they say the next generation of health innovation will be built on proprietary technologies that make wellness simpler, more comfortable, and more human. Oh, I'm not even showing you what I'm writing. All right. The next generation of health innovation will be built on proprietary technologies that make wellness simpler, more comfortable, and more human, says Andrew Dudum, I don't even know how to say, is the CEO of Hims and Hers. YourBio's patented TAP and Halo technologies represent major advancements in user experience and design, and we're excited to bring them into the Hims and Hers ecosystem. YourBio's Halo and TAP technologies are ushering in some of the most significant scientific advancements in the blood collection space in decades. By using microneedles thinner than an eyelash, these systems produce high-quality blood samples, essentially with no discomfort. This technology has the potential to change how people engage with routine blood collection, replacing long waits and painful needles with far more convenient, user-friendly experience. For decades, blood sampling has remained largely unchanged, forcing patients with healthcare providers through an inefficient process that causes pain and just basically, no one wants to go to the doctor and get stabbed with a needle. Nowhere, right? I go to the dentist, you get the needle here, that's way worse, right? I don't like needles. No one likes needles. If you do like needles, there might be something we can have another conversation. But you know, Hims and Hers has acquired this company that's going to make it very painless. And so I'm going to go over. This was an article. It basically explained everything that I just went over. One thing I do want to say though, financial terms were not disclosed, but this is an all-cash transaction that's expected to close early 2026, and it'll be funded from the Hims and Hers balance sheet, right? So they have about, I think it's like 300, 400 million in cash or cash equivalents, so they can afford it depending on how big, you know, but it's obviously not going to be too big of a purchase. So this is what it is, right? Now, when I first saw this, when I first saw that product, I thought it was going to be, I wasn't sure how big that was. That's actually very, very small. That product right here, this is very, very small. And it says nearly 30% of Americans patients skip medical treatments due to the anxiety, pain, and discomfort and general annoyance of intravenous blood draws. By eliminating the needle, the tap device with Halo technology eliminates the pain. Again, you know, what exactly is this, right? So here it explains, right? This is like your skin, I guess. And the tap device with Halo, it penetrates only under 1 millimeter of skin, right? So it's very little. This is about as much skin as you're piercing. Their top competitors are built using blades that are designed to puncture the skin essentially 2 millimeters, right? And then the Venipuncture, which is like essentially the full needle that we all hate, it will pierce between 3 to 10 millimeters of skin. So obviously there is a big difference, right? And this is the product. This is more about what it is, but when I looked at this, I noticed that the date was October 2023, the article that they released. So they have been, this company has been building this for years and getting it approved and, you know, through the regulatory and all that. So that's good that they are now, YourBio was already getting all of this done. So now Hims and Hers can just offer it, right? But what is this product? Well, here's a video that they have. Now let's see if I can okay, hold on. Sorry, I'm just trying to get this. All right. You will be able to hear it through my microphone, I'm sure. So here we go.
Every parent knows that look. The moment you tell your child they need a blood test and their eyes go wide with fear. Then the tap device was introduced to us. The first time they used it, I was skeptical. No pain. But Theo just sat there. He looked at me confused and asked, when are they going to do it? It was already done. The tap device looks nothing like a traditional needle, which already helps with anxiety and is simple to use. First, the nurse cleans the area on an upper arm with an alcohol wipe. Then, a little heat is applied to the area in order to get the blood flowing. While we do that, Theo likes to decorate his tap device with stickers. Then they place the tap device gently against the skin. It has a flat bottom that sits comfortably on the arm, and it just sticks to the skin. The magic happens when they press this plunger on top. That's it. One press, one tap. Inside, tiny microneedles, thinner than an eyelash, create a small collection spot, while a gentle vacuum draws the blood into a collection tube. The needles are so small, they never hit nerve endings, which is why it doesn't hurt. The whole process takes about 2 minutes. No tears, no struggling, no trauma. When it's done, you just remove the collection tube and the sample is ready to go. The device itself has built-in safety features, so there's no risk of needle sticks, and it's single use, so it's always sterile. That moment changed everything for us. No more dread before appointments, no more holding my crying child, and no more feeling like I'm betraying his trust. Now blood tests are just blood tests. It's like someone finally understood what we were going through and said, it doesn't have to be this way. YourBio Health, one tap at a time.
All right, so that was obviously their YouTube, and they have just basically just a couple videos that they released 5 months ago. I should have shown you that. They released those videos 5 months ago. So this product they've been working on, they've been getting it, you know, set for regulatory approval, and it has. So they have all these things now set in place. They just needed a big buyer to really facilitate and distribute this product, right? Now what I'm looking at, so it's easy to go into a doctor's office and now to have that thing go choo-choo, right? That's great. What I really think this is going to be huge on too, because of course doctors are going to have it, right? We're going to have doctors and facilities and stuff like that, right? They're going to be using it as well. The one thing though that I think it's going to be big on is for at home. Hims and Hers, their whole thing is convenience, being sent something straight to your home, right? You can do things digitally through the platform. Buying this company to sell to doctors and offices and stuff like that, right? That wouldn't make a whole lot of sense. They're doing it because they're going to be offering it to customers that you can just take blood samples, right? You own that thing. You pay, $200, whatever it is. But then you just buy little vials and then you can send in your blood samples whenever you need to for at-home blood sampling. That's very easy. I mean, I will do it. Like right now, my kids, we need to do an allergy test. Bam, get some blood, send it in, right? Amazing. I will buy this eventually because this just seems like a great thing. Once we get to the point where we can just send in our blood somewhere or have it picked up, something like that, where we are just able to do that. That the ecosystem, the healthcare ecosystem, allows us to take blood samples in the home, send it out, and then get results. I mean, you have to imagine the healthcare system being like Amazon. Amazon has taken the whole shopping process to getting in your car, driving to a place, walking around, doing all this stuff, waiting in line, getting in your car, like this long, drawn out process that you dreaded. Amazon said, you know what? Stay in your home. We'll go back and forth. We'll deal with the logistics and the delivering, all that. We'll hold the product. You just just look at it. You probably know most of the stuff you buy, unless it's clothes, really, you're not trying on. You're not trying on a lot of the things. I didn't try on these microphones, or I didn't try on all kinds of things that I bought at Amazon. These LED lights, I didn't try on, you know what I mean? So you buy a lot of things not knowing exactly how it's gonna be. Of course, going to the store and knowing how some things work, and you want to test some stuff out if you don't know. A lot of us know exactly what we want. Toilet paper, I know what I want, right? Paper towels, all that stuff. Soaps, shampoo, all that, no, what I want. Toothpaste, all that, right? I don't have to get up and do anything. It made it very simple. Hims and Hers is now going to do that for healthcare, where the things that you want to do for your health, it's going to be very easy to do. Now, obviously, Hims and Hers is not the only company that can do this, but they're putting themselves in a better position than others to have customers, have that brand. I went to college for a little bit, didn't do too much as I want to. I moved out early with my girlfriend at the time, and so I learned one big thing about brands and advertisements and stuff. They told me that you see advertisements, but advertisements aren't necessarily meant for you to buy the product. It's meant for you to trust the brand. Because the more you see the advertisement, the more you're going to trust that that brand is real, that it actually is successful. So it must have good products, right? And so it becomes more about trusting the brand, then they buy the product, right? That's a lot about advertisement. Now, first of all, who's going to even buy your stuff if they don't know it exists too, right? But Hims and Hers has done very well by getting into the mainstream public, and they have a lot of customers already, and it's going to continue to grow. That having already that success, and then adding in at-home blood samples where you're able to figure out what's going on with my body, right? In all different facets. Like I said earlier, my kids' allergy tests, right? What if I want to check for this and that? I fell down a cliff. What if I had blood clots for a while? I'm sure they had to take blood tests. They had to do all different things. And it's like, well, why can't we just make it super easy, super simple? And I do believe that this purchase, that this acquisition is going to be very productive and efficient, and just overall a good thing for Hims and Hers. So that being said, I'm also going to go over, this is Hims and Hers on Seeking Alpha. As you can see, there's a lot of buys. We even have a strong buy, strong buy, and then we have a hold. But mainly it's a buy, especially at these levels at where it is now. As you can see here, and I don't know why Seeking Alpha is doing this, but whatever. I had it better earlier, and it was fine. But as you can see, in December, 60% positive, but really we only have about 5 or 6 years. 6 years, 1, 2, 3, 4, 5, 6, right? We have about 6 years of data on how this stock performs on any given month. What I want to look at is 2025, right? We have 2025, 54%, 20, 34, 12, 70, almost 12, 32, 36, 33, 19, 12. I mean, every single month was big. Now, I'm actually shocked that it was only down 12%. I thought it was actually down more like, yeah, I guess it was been about 30% or so that it's dropped since its highs. And I sold. I sold right before October because I knew this was going to happen. So looking at how it's been performing, it's basically double digits every time. I think we're going to have a positive month. And I do believe it's going to be a 15 to 30%, right? It's going to be, here we have a 12, basically a 12, and a 12 here, right? So I guess we could say a 12, minimum of 12. But when you don't have a 12, then you have a 20 and a 20. Other than that, you have 54, 34, 70, 32, 36, 33, they're almost 34. Like big numbers, big swings. Hims is a very volatile stock, right? It's going to have big ups and big downs. So I do think December is going to be a big up. I do think it will be about 20% to the upside, but let's just say 12 to 30. That's why I'm saying 20, because it's kind of in the middle. I think it's going to be about 20%. So, if we look at, let me just pull it up. If we look at Hims, right, on December 1st, it was about 38 something. So if I say I expect it to go up about 20%, I think it's going to reach about $46, right? I think it's going to reach, where is New Year's? Right here. All right. This is about where I think Hims is going to go. And this is also why I wrote, I have this box right here saying this is where I think is a really good time to buy. I think it's going to continue to bounce off this line if it does. And this is a good support, right? I think all of these tops have been previous supports. They've all been previous supports. I mean, look at this one. Bam, bam, right? I mean, this one almost, it just went under it a little bit, right? This one, bam, right? They all bounce off these supports. So I just really, really feel confident that 34, 35 is the support for Hims right now. Now, it does have a PE of about 74 currently at this price. But again, it's a high growth company. So I do believe that over the next month it's going to reach about 46, about 20%. And I think this is a very good range to buy. I would say even buy at 46. I could say you could buy at 46 and it's going to, now it will bounce. It's going to bounce, I think, in this wide range. This is a wide range, but you have to remember, with stocks that are very volatile, they're going to go up big and down big. So this thing could bounce between 68 and 35 for the next year. And then after that, break through 68 and not see it again. right? But it might bounce through. Maybe the next time it comes down and it finds another support over here closer to 40, 45, right? We could see over here we have a slight support building right here at 42 somewhere, right? So it blasted through that, but then it met up with this support right here at the top, right? So I think this could be a support. Maybe it bounces to 46 by the end of the year, then drops back down in January, then pounces. Of course, you just never know. Another thing we have to keep in mind for HIMS stockholders, shareholders, a lot of people have lost money on the stock this year, which means tax loss harvesting. So December could actually go negative if people decide to sell it because they're down. It's going to be interesting because people don't really like to tax loss harvest high growth stocks, even though they may be down over the last 6 months, right? They understand that, okay, this thing's going to still grow. If I sell now, because again, it's so volatile, next month it might be 20% higher, might be 30% higher, right? I'm just going to hold, not going to sell, not going to buy, I'm going to hold. So I don't know about the tax loss harvesting. I don't think it's going to get hit too hard, if at all, but that is a risk that we're taking because, I mean, technically, year to date, it's up 47%, right? It's up 47%. But if you bought in these months in February, if you bought at all in February, or you bought between May and November, so basically if you just didn't buy January, March, April, if you didn't buy January, March, April, and this is where I had my other first square, if you did not buy in those, you've lost money, right? So there's only 3 months where you could have bought HIMS and made money. Now I bought previously, so I had, I was good, and I had also, I've been keeping my eye on HIMS for a while, but people have lost money. Now I have only lost money over the recent short term right now because it's just kind of gone bad, but I'm still up, still positive. And so I have no reason to sell. I only sold at 58. I literally sold right here. I think I sold, where's the 58 right here. I think I sold right here. Because I remember being like, oh, I sold the day, or I sold right here. I either sold the day after, or a couple days before it jumped to the high of 62, and then it just went down. And I remember being like, wow, again, you do not want to time the market at all. But sometimes when you watch a stock enough, you kind of start having these feelings. You kind of just, you can make a very educated decision, educated guess, I guess, an estimate, educated. It's not a gamble. It's an educated investment, right? But I sold, and I sold 20% of my holdings. I had 50, now I'm down to 40. I sold at 58, so I sold 10 of them. So I made $580. I didn't make 500, but I sold it for 580, right? And so my thought process was, well, if I've put in $1,000, it was about $1,100 in the stock, right? If I take out at 58 right now, I take out some of the capital, right? I've already have my gains on this. So I'm going to just take out a little bit, take out 10 shares, 20%. And then now I can ride the 40 shares I have and just ride that into the sunset, knowing I have even less capital involved. I took a profit from those stocks, and now I can put those into other things like a Meta and Amazon or Google, other stuff that I do feel are going to grow. Now, HIMS I do think is going to grow pretty significantly over the next year. So will it grow more than Meta, Amazon? It's possible, 100% it's possible, because it's a lower cap. So the odds of this doubling and tripling are a lot higher in a sense than Meta and Amazon because they have such a high market cap. So for them to double up would be a big deal. So this thing can obviously go a lot more, but it also has a high PE where the other ones don't. And then the other ones are considered a little bit safer, right? Meta offers a dividend a little bit, but they do offer a dividend. So it's like little stuff like that. Okay, I could, take those 10 shares, sold it for 580, and now I can apply that to other stuff, or I could apply it to maybe another high growth stock that I think is going to do something. But I think the goal as an investor is to invest into high quality companies and to eventually take out your own money. Take out your money that you put in that investment and then put that into something else. And then let that something grow, and then take out your money, and then, right? And then you kind of just keep doing that. And then you have a stack that you've used, right? Like hymns, right? My initial investment, and I'm going to use that stack around and place it around. But then I'm also going to continue to make deposits and make new stacks, right? So over time, I'm starting to have all these pillars of things that I can move around. And I'm like, okay, I've put $1,000 in this stock. It has now grown X amount. Let me take out half of my investment. Let me take out 30% of my investment. Let me take out a big chunk of it, and let me move that chunk somewhere else. Let that chunk grow, right? And so that's what I believe a good goal as an investor should be, is to like really take out your capital investment eventually and put that somewhere else. Now, you want to do it after you've gotten your gains, after you feel comfortable, it's all about individual personal preference, right? Another thing I do want to say though is now that we're in December, tax loss harvesting is going to be a really good time to be an individual stock picker, because even though there's tax loss harvesting, something like a HIMS, let's look at a HIMS, right? Let's look at a Nike, right? Let's look at a Nike year to date. Let's go all year to date. I mean, year to date, Nike is just horrible. It's down 11%. It's down 11% when the S&P is up probably like 20%. I mean, it's just horrible performance. And when we even go further, I mean, since the end of 2021, this thing has gone down. Nike has gone down 62%. 62%. Now, it has gone up since that big tariff scare, 25%, right? So, okay, that's good. But over this last few years, everybody's just been losing money. So something like a Nike could easily get destroyed in December. Now, again, being a individual stock picker, you might be like, well, if you chose Nike, that's actually a horrible decision, right? If you're just going with the market, you'd be better off. Yes, in a way. But being an individual stock picker also allows you to catch stocks that are doing really bad, but should do better. The stock prices really only reflect, this is a really big thing to remember. I'm going to go back to HIMS. Stock prices really only reflect the perceived future value of a company. And that is if it is being logic. A stock price could also mean nothing. Have you heard of something called GameStop? We've gone through all of these things. There's plenty of stocks that have gone up. When HIMS went up all the way up to here, to 68, and then it went all the way down to 35. That's basically cut in half. Did the business do half the business? Was the business now not doing half of the business it was doing? No. Did the business going from 25 all the way to 70 almost do 2.5 times the business that it was just doing in a month? No, right? So the stock is going to go crazy over the short term sometimes, especially with something like a HIMS, something highly volatile, right? It's going to double up and then go down 50, and double up and go down 50, go up 30, go down 20, right? It's going to do that a lot. But if you know that the company is making money and their growth rates, everything is going well, which HIMS is, you don't have to be scared of anything. Over the long run, that's where the actual value of the company is, right? Like I said, logically, if you're doing a stock price, it's still perceived value, because no one knows the future value of a company when economics can change, state of the markets, everything can change in 3, 6 months to a year, right? So the stock price really reflects again, if it's logical, a perceived value of what the company is going to look like in about a year, 2 years, something like that, right? Or it means absolutely nothing, and people are just buying it because they think it's going to be a great company, or people selling it because they think, oh my God, I heard some piece of news and I just want to sell it all. So, which is why looking at a stock price only determines if I feel like I'm really willing to look like, okay, this is a good time to buy. Because, you can look at a good company, but if their stock price is really high, you're like, this is not a good time to buy the stock. Even though this is a good, profitable company, the stock price is just too high. Well, when that price comes down, now you have the opportunity to say, hey, I know this is a good business, a good fundamental business. People are just, pooping all over it, right? So let me just catch this falling knife for a minute. It might be a little pain. I might cut myself a little bit, but I'm going to bandage it. I'm going to take time, let it heal, and eventually I'll be back to normal. If not, I'll be better. I mean, obviously, if you catch a falling knife, cut yourself. You're probably not going to be better than, but you get the point, right? When you find a stock price that is going down, but a fundamentally good business, that's when you want to go in. So right now, Hims, over most of this year, has gone down. But fundamentally, as a business, has just improved. And that goes with a lot of companies out there as well, right? But not necessarily when it comes to the stock price. The stock price doesn't go down and the business has improved. That doesn't happen all the time. So Hims has been doing that in terms of getting more business, better business, and yet the stock price hasn't really done anything. I mean, when you look at the stock price right now, you could have bought it at the same in February 2025. I mean, almost a year ago, right? 10 months ago. You're going to tell me the business is in the same shape it was 10 months ago? I think it's in a better shape. Now, I know they had the whole weight loss, Wegovy, Novo Nordisk issue, but that's all going to that's going to go away eventually. They're back in talks and with Wegovy and so it's like, it's fine, right? So again, I do think this is a great time to buy Hims stock because it just seems like, looking at the chart, I put in this box, I just knew it, and it popped up, and it really hasn't hit below this box. It's literally right at the top. The current stock price is right at the top of where I kind of was saying, the target zone is to buy. Now I'm doing another one. I'm doing another target zone. Like, this is the time to buy Hims because I do believe from here it's going to push up and continue to go higher and possibly never look back. It possibly might not ever look back again until there's a major crash, right? And then, but if you're gonna hold all your money until a major crash, then just gamble, I guess. I don't know. Anyway, that's all I have to say about Hims and Hers and their acquisition of YourBio. I think it's a great idea. Getting blood samples from people at the house, easy, quick, efficient. I think it's going to be good. So yeah, please go ahead and give a like and subscribe if you are even watching this, the people. Yeah, I really appreciate anybody who has been watching this far. And yeah, never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.